On Friday, before the stock market opened, we seen stocks crashing lower, thanks in part to Apple before the bell coming down after Trump announces new potential tariffs. So what does this mean for stocks going forward? Are we about to rebound and go to all-time highs? Or are these gaps about to be filled maybe as early as next week? Now, on Friday morning, as soon as I get to the gym, I see this message on my phone talking about Trump says Apple must pay 25% tariffs on iPhones not made in the United States. Now, when that first came out, we saw the S&P futures come screaming down. However, the markets continue to go lower. Why was that? By this next post that he put out there on Truth Social, Trump calls for 50% tariffs on EU, says he's not looking for a deal with the bloc. And again, the market's freaking out saying, oh my goodness, we have tariffs once again. The orange man just will not stop. Then we come over and we look at what the S&P did after that, and that really caused things to cascade lower because now we're not just talking about one stock being Apple with 25% tariffs, but now we're talking about the whole entire European Union. But wait, there's still more because as the day progressed, we seen Trump come out with this tweet right here. And what he had to say on Apple was, it'll be more, it will be Samsung too. And he basically says, if Apple and Samsung build a plant in the US, no tariffs will be made. Now, something that I took out of this key phrase, build a plant. Didn't say all the plants, a plant. So technically, could Apple and Samsung maybe build a plant in the US that only makes 10 phones? To kind of get around that loophole, let me know what you guys think in the comment section down below. Now, as we come over and look at the volatility index, as those two news articles hit, we saw the VIX rocketing on the way up, but then look what happened throughout the day. The VIX continued to dwindle lower, lower, and lower, and we did see the VIX starting to rise up here towards the end. But then we look at the fear and greed index, only dropping from 66 down to 64. We are almost dead smack in the middle of greed. Then this week, we look at the most recent investor sentiment survey, came in at 37.7 for the bulls. Historical average is 37.5. So now we're not skewed really one way or the other. We're right in line with where the average is. We also see the bears drop down to 36.7. Neutral did rise a bit all the way up to 25.6. However, with all the chaos in the market, something we want to think about, the US is going to have to refinance its debt here in the near future. So that's one of the reasons why Trump wants to get yields lower, aka turmoil in the market, force Jay Powell's hand to lower rates. We look at the 10-year yield, we had a left shoulder, head, right shoulder over here, inverse head and shoulders pattern, along with an ABC pattern over here, which completes up here about 4.86. Now, if yields go up that high, that's going to cause the US to refinance the debt at much higher rates than what we need to. Keep in mind, Moody's just downgraded us last week, all because one, unsustainable deficits. So the yields going up is not going to be a good look out here for the market. However, does Trump have a Trump card to play? Come over and look at what Besant had to say today. Besant says supplementary leverage ratio may be lowered soon. Now, what will happen when this is lowered? It will allow banks to go ahead and buy more bonds. Banks buying bonds, well, guess what? That will push the 10-year lower. Now, will it be in time before the US has to refinance their debt? Now, before we jump into the charts, I want to let you guys know about 3 amazing prop firm deals. One of my favorite prop firms, Take Profit Trader, 30% off all their evaluation accounts, no activation fee. Then we have My Funded Futures. If buy any evaluation, get a free reset. That sale does end on Sunday. And if you're new to My Funded Futures, you get 50% off your first evaluation. And then Tradeify, which I just received a payout this week from my straight to funded account. You get 35% off all their accounts. And if you choose their advanced plans, you can get a $50K account for only $30. To take advantage of these offers, use the links in the description box down below. Now, as we come over and look at the yield curve, the 10 versus the 2-year, you can see this week we're on the rise again. Now, we did get a little bit of a pullback here on Friday. Then we come over and look at the Dow Jones versus the transportation index. Notice up here at the highs, we had that divergence. Now, as we've come off, notice the transportation index basically following the Dow. But what I would say is, notice when the transportation index started to recover, it did not go nearly as close to this highs as we saw with the Dow Jones. Then we come over and look at the next chart. We look at the SPY versus HYG, high yield bonds, and we got something very interesting setting up. Notice right up here as the SPY was making new highs. Look down here at HYG. HYG failed to make a new high. This high, which correlated right over here on the S&P, was actually higher on HYG versus when the SPY continued to go up, we saw a little bit of weakness already starting to come into HYG. Is this an early warning sign? And now we're about to see some of these gaps come back and get auctioned. Now, if we look at how everything performed out here, we see on Friday, we only had 4 sectors: utilities, basic material, energies, and consumer defenses. But look at the 1 week performance. Basic materials was the only sector in the green. Every other sector was in the red. And look at technology, down 3.1. Now, if we come over and look at XLK real quick, the technology sector, notice we're not even quite over yet in the gap support. In this week on Friday, we did gap a little bit lower. MACD indicator on the daily chart is starting to cross over. So we're starting to see some of that weakness out here. Now, if we look at some of the other tech stocks like Nvidia not looking as bad, did fill the gap right over here. We still have that anchored VWAP from all-time highs, which we'll see if it acts as a magnet. Then we come over and look at Google. Google has been strong recently, but then on Thursday, we get that shooting star type of candle. Then we gap down. Is this basically a nail in the coffin? And we're going to see Google starting to come lower as well. Let's take a look at Meta real quick. Meta coming right down towards gap support. We're going to see, are these gaps about to start to get filled? Because as we come over real quick and we look at the QQQs, look at the candle structure. We have a big wick on the top, and I would say we closed in the lower third of the range. Now, not quite an inside day since the high did push up a little bit higher. And this is starting to show us that there is signs that there are sellers trying to step into this market. Now, this week, it wasn't a heavy news event. And we look at this, are we going to be able to start getting into this gap? This down in this area does make logical sense. If we pull our Fibonacci retracement from the swing low right up here towards the swing high, notice that 38% retracement, which would still be a very minor retracement, and what could still be another bullish leg on the way up, comes in all the way down here about 476.77. And it also correlates with the high volume area right over here on the composite profile. Next, we come over and we look at the daily chart real quick. If we pull a fib right over here from this low, and notice from the low right over here all the way up to this recent high, we can see that was a 22% move. Now, to think that we can pull back a little bit really isn't asking too much. From the high down to a 38% retracement would be about a 7% correction, and it would fill that large gap that was left behind from the prior Monday. Then it would also bring us over towards this high volume area of the profile. However, I want to caution you guys a little bit, since we have such a minus development area within the profile, meaning there wasn't a lot of volume built out in this area. The market is likely going to go ahead and fill in this area a little bit. Now, is it we bounce down a little bit, we bounce up, and we do something like that? Or do we just simply consolidate up in this area this week? On the daily chart, we have the MACD now just about to cross to the downside. Then on the 4-hour chart, we see the MACD indicator clearly cross to the downside, making a beeline down towards that zero line and down towards potentially filling the gap. We can see all the volume that was built out up here on the profile. And now that we're holding below it, really lends to the case that we're going to come down towards the minus development area. And in this case, falls right within that gap being filled. On the 30-minute profiles, notice today we did go a little bit lower. MACD indicator also went lower. So we didn't get that divergence play that I was looking to play out. And as we look at this, are we going to make it up this week to potentially fill the gap? Because if the market can hold roughly where we closed on Friday, we can make the case that maybe, just maybe, we're trying to form some type of ABC pattern on the way up, and that would come right up here, potentially filling the gap. But I also want you guys to pay close attention to this. We put this out here on the hourly chart. If we look from Tuesday on, notice where the large candles are. The larger candles most definitely are to the downside. So we can see the bears are trying to step in a little bit. Now that was a little bit different over here. Look over here, big bullish candle, big bullish candle, big bullish candle. And now things are starting to flip over here just a bit. Now, what I will say is the MACD indicator kind of flatlined out. Keep in mind, the futures markets will be trading Sunday night. They close Monday at 1 p.m. Eastern time. Stocks will be closed. So we're not going to get the cues to trade anymore until Tuesday out here. Now, if we come over and look at the futures markets real quick, look at the 4-hour chart. We talked about this minus development area on the live stream. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed. Then you have the bell notifications turned on for all. Next week, we have more Take Profit Trader accounts to give away. Now, as we're looking at this, we did close below value area low this week, which comes in at 21,191. We're going to have the weekly point of control at 21,422.00. And value area high will be up here at 21,542.00. Now, normally when we close outside of value, I expect within the next 1 to 2 sessions, we come back and at least test value. Now, in this case, since we're dealing with a weekly volume profile, A session is 1 week in time. So we'll see if this week we can come up there or potentially the following week. Now, notice when we bounce back up today, we basically came right back up towards this structure breakdown point. Basically candle wick right over here to these candle bodies. We got right back into this area. Now, are we going to simply turn and go right back down? Now, if we just simply add 2 trend lines up here, we can see that right now we do have the NASDAQ traveling this downward channel. Now, earlier on today, we did overshoot it to the downside. We got right back into the channel, and we got to watch out this week. Do we come right back to the other side of the channel and start to reject down, or do we finally break out and then maybe look for a retest and then keep continuing on the way back up? Next, we come over and start looking at the 30-minute volume profiles. And this morning, we had it called very good on the way up during the live stream. You can see right over here, one of the targets we were focused on was the swing low right over here, basic structure breakdown point. And what I mean by that is, if we go and we highlight the candle wick to the candle body, look at this candle right here. We sliced right through that area, and I was in the belief that at some point today, we were coming back to revisit that area. And that's exactly what transpired out here today. Now we can also see that we have a high, lower high, and another lower high, and we continue to make lower lows along the way. However, are things about to change? Because if we start coming down here just a bit on Sunday night or even Monday, we can pull a Fibonacci retracement from the swing low up here towards the swing high. Now, the most likely areas that we retrace is going to be somewhere between the 50, 61.8 Fibonacci level. If we grab our Fibonacci extension tool from that area, we measure A to B, and we pull all the way down to D, notice that would bring us all the way back up towards the top of the range. Now, if we basically stop where we closed out on Friday, we can see that would take us all the way up here, taking out some of these pointed controls above us. Keep in mind, we had 2 consecutive untested pointed controls, and now when the market opens up on Sunday, we have a 3rd consecutive untested pointed control, which means highly probable that one of these areas will get tested out on the next trading session. Now, as we look at the volume profile levels, we have 21,063.75 as value area high. The point of control will be 20,938.75 with value area low coming in at 20,853 and a quarter. Now, ideally, if you want to get long, this would be a gift. Let the market open up weak. We get below value area low, and then we start coming back up. Now, ideally, if we could even gap below that, that would give us 3 consecutive untested pointed controls above us, and we would simply want to aim for the first pointed control that was left behind from Friday if we got back above that value area low. Now, if we break value area low and we're staying below it, then we want to turn our attentions back down here towards the lows, candle wicks to the candle bodies, somewhere from about 20,802 all the way down here to about 20,727. Now, if we come over and look at the dollar index, we saw the dollar index on Friday also getting weaker. Dollar index was down substantially, down 0.79, roughly 79 cents. And look, it looks like we're trying to come right back down and attack this low. The MACD indicator could be setting up some type of MACD divergence, which is a reversal pattern. Then we come over and look at the precious metal gold real quick. Gold had a rocket ship on the way up on Friday. Gold was up $70. We got above this high volume area and above the 61.8. Now the next stop is going to be 33.76, which is a 78% retracement. If we breach the 78.6 Fibonacci retracement, highly probable we're coming all the way back up towards the swing high up here and probably going to make a run to new all-time highs. Now, as we come over and look at the SPY real quick, starting off looking at the weekly chart, notice the high went above the high from the prior week. The low was also lower than the prior week. So in this case, we had an outside day. Notice we also closed near the lower third of the range, which is also very bearish for this market. We did slightly get into that large gap that was left behind from last Monday. And now the question is, are we going to start to go lower? Because if we grab our Fibonacci retracement tool, measure from the swing low right up here to the swing high, notice where the 38% level comes in, right around 552.24. That would be a minor retracement, what could still be a very bullish move on the way up. The S&P typically loves to retrace to 50% level, and that would bring us all the way down here to about 538.99. Now, when we come over and look at the daily chart, you can see we opened up down into that gap. Boom, we rejected right back out. Now, this week, we did leave behind several gaps to the upside. The MACD indicator on the daily chart is finally starting to roll over here just a bit. On the 4-hour chart, we see the MACD indicator making its way down towards the zero line. But then as we come over and look at the 30-minute chart, we can see as we did push lower, the MACD indicator made a new low. But if we come down maybe Monday or Tuesday and retest this low, Are we going to start to set up some type of MACD divergence, which will lend the case we are likely going to get a bounce in this market? Notice on Friday, we did not come back and fill the gap. Notice on Wednesday, we did not quite fill the gap. We got close, but we did not quite fill the gap. And then even on Tuesday, we gapped lower and we never came back and filled the gap. So this week we had 3 unfilled gaps to the downside. That's something we have not seen in quite some time, because if we scroll back in history just a little bit, notice every time we gap down, like right over here, gap down, boom, the market came right back up and filled the gap. We had another large gap over here. We gapped down. 2 days later, we came back and filled the gap. So we see the tide is starting to change here just a bit. Then as we come over and look at the futures markets for the S&P, notice what we're able to do. We're able to take out that high volume node, and we're able to re-auction this entire secondary minus development area. However, we did not quite make it all the way down here, filling the gap. We also still have this untested point of control down here at 56.78. And we'll see if next week's going to be the week where we finally make it down towards that area. Now we are closing below value area low on the weekly, which comes in at about 58.44.75. The point of control will be up here at 58.59 and a quarter. Value area high will be up here at 59.66.25. So if we can start to break back above value area low, I would want to target that point of control. But also, if you look right here on the profile, very thin, we need to spend a little bit more time up here. If we start cracking the point of control, I'm going to be looking for this whole entire area to come back and get auctioned, really anywhere from 58.94 up here to about 59.17. That's going to be an area of interest for me, but only once we get above the point of control. Now, keep in mind, since we did close outside of value, I expect that this week or the following week, we are going to come back and test that level. If we stay below value area low, we start cracking back below the low of this week, then I want to turn my attention down towards gap support, then the gap being filled, and then that point of control at 56.78. Now, something we were talking about today on the live stream was a minus development area on the profile. You can see how thin the structure was. We also had this swing point right over here, that structure breakdown point, which correlates right over here. You see that big bar slice right through it. And I was pounding the tape pretty hard on the live stream. We are probably going all the way back towards that level. And that's exactly what transpired out here. Now, as the day progressed, this minus development area got smaller and smaller, because look at how the profile actually developed. You can see we built out that whole entire area, where in pre-market, it was still a minus development area. Now, on the 5-minute chart on the live stream, we were talking about this uptrend that we had, and look how the characteristic changed. We broke below it, we came back to test it, and then we came right back down. We made it all the way back up near the high of that large down 30-minute candle. You can see we made it all the way up and actually hit the very high of that down candle. So now the question is, do we turn and go back down, or are we going to start going back up? On the daily volume profiles, we have 57.87 as value area low. The point of control will be 58.14 and a half, with value area high being 58.32.50. Now, if we start breaking value area high, then I want to turn my attention over here towards this minus development area, or we can say that structure breakdown point, which will be candle wick right up here to the candle body. And that's going to fall somewhere in line of 58.42 up here to about 58.47. If we breach that, looking for the market to rerun the highs from the overnight session, then look to see, can we come back and re-auction some of these other point of controls substantially higher, 59.47 and 3/4 and 59.60. However, something you do want to be well aware of, if we start breaking value area high and then we turn and come back down, we need to target that point of control. We need to target value area low. We need to retarget the lows from Friday, and then anything below that price point, we want to turn our attentions all the way back down here towards that gap potentially coming down and getting filled. Now, if you want to learn about Take Profit Traders' 3 hidden rules, make sure to watch this next video right here.